Hello and welcome to an exclusive webinar on ICICI Prudential Flexicap Fund NFO. Joining us now is Mr. Chintan Haria, Head Product Development and Strategy at ICICI Prudential Asset Management Limited. Chintan, to begin with, equity markets are trading at an all-time high. Can you broadly share with us your view and perspective on the economy and the equity markets?
Yeah. Hello, everyone. Essentially, all-time high is something which happens every time when the markets grow up. And we all know that as the economies grow, so does the companies, and the profitability of the companies also grows along with the economy, because the sum total of the corporate activity is essentially what the economic GDP is made up of. So we're not surprised when it comes to all-time high. In fact, today we are at $3 trillion. We are going to $5 trillion economy in the next few years is what it's said. And that would essentially also mean that the corporate market capitalization, which is around $3 trillion today, may also mirror and reach there. Will it be a straight line? Of course not. Equities are up and down and there is volatility. And that's where we need professional investment and mutual funds come in very handy in most people's portfolio, because we do not have the necessary time to follow the markets, etc. I know there is a growing trend among people to start investing directly, but that normally happens whenever the markets are in bull territory. But in the long run, to create wealth, I would say that for most investors, investing through mutual funds would be the right route. And we firmly believe that with the expertise that we bring in, it's something which investors should look at from a long-term investment allocation into equities, because all the other asset classes like debt, gold are already part in general of most Indian investors. Equities is underpenetrated in India, and we truly believe that with the broad basing of the economy in the next 3 years or so, with global liquidity coming into India and Indian corporates also doing well, it is going to be an exciting time, but a volatile time because of global factors. So investing through mutual funds would be the right way, is what we truly believe.
Right. Chintan, we've seen that traditionally, while investing in fully invested equity mutual funds, most of the investors, and especially the first-time investors, usually prefer flexi-cap funds the most. What do you think makes this category so much more attractive?
Clearly, if we look at it, in India, we are a growth-oriented economy. We have large caps which are well established. But so many sectors are opening up, and in those so many sectors which are opening up, the mid-caps, small caps also have a great role and potentially can deliver good returns over the next 3 to 5 years. And hence, as a combination, if any single fund can provide you access to large cap, mid-cap, small cap in one go, and the fund manager on top of that has flexibility to move into either large cap or mid-cap or small cap, depending on the valuation differential, it is something which is one of the best investments for investors, we believe. And that's where the Flexi-cap as a category is the largest category in the industry. And we believe that for most investors who are looking at fully invested funds, this becomes a good tool for long-term wealth creation, because you are getting access to large, mid, and small. And if the fund manager does make the right choice between large, mid, and small during the market cycle, it can even be a better experience for the investors.
Chintan, ICICI Prudential AMC is known for managing funds based on an in-house model, most discussed being the Balanced Advantage Fund. Will ICICI Prudential Flexicap Fund also be based on the same model?
Correct. So essentially, if we see for the last more than 10 years, our Balanced Advantage Fund has been managed, the equity portion has been managed in a way that how much equity should get invested in the Balanced Advantage Fund is determined by our in-house price-to-book model. And if we look at it, it has helped us wade through the extreme volatility in the last 7-8 years, especially if you look at the last 15 months with the pandemic-led fall and then the rise. It was very easy to get negative in March 2020, but the model told us that valuations are cheap, so increase the equity level, in which we did that. So we firmly believe that along with our subjective investment hat, if there are anchors which are valuation-based models which can help us decide how much equity should be there, which is what we do in Balanced Advantage Fund, it is a very important tool in the hands of the fund manager to avoid the greed and fear which even a fund manager can go through. It's very easy to get caught up with all the negative news. the valuations which was showing by the model was showing that we should be higher in equity, and that's what we did. So our experience in that has taught us that, for example, in the Flexi-cap fund, you can have large, mid, and small. But how much large, mid, and small you should have? What is the relative valuation between the large, mid, and small? How much, let's say, the valuation premium large, mid, and small has between each other? If we combine these two, make a model and decide that based on the relative valuation today and the market capitalizations of large, mid, and small, the fund should be, say, 80% in large cap and 20% in mid and small cap today because of the way the model tells us, then at least the fund manager has clarity. He has to be 80% large cap, 20% mid and small cap, and can construct the portfolio in that manner. So one part of the decision-making process, which is how much large, mid, and small should be there for the investors' long-term wealth creation, is determined by the model. And we've developed this in-house model for the Flexi-cap fund as well. And we truly believe that the same way as we have put in discipline in the long term in the balance advantage fund model, if we stick to the discipline in the large, mid, and small model for the Flexi-cap fund, it will help investors over the long term, those who invest in the Flexi-cap fund of ICICI Group.
Right. Chintan, can you highlight some of the key points which make ICICI Prudential Flexicap Fund unique in this category?
So like we just spoke about, one is, of course, the model-based approach towards large, mid, and small. It's something which we are bringing to the investors, and it's something which is new from an investor category perspective or an investor experience perspective. And also, apart from that, our experience in managing mandates which are true to label will help investors also in the Flexi-cap fund. Plus, of course, the fact that today, if we see market is getting more broad-based and an investor who is looking at opportunities to increase equity, the Flexi-cap fund of ICICI Pro will be one of the better ways to start investing in it. It is an NFO, and clearly over the next 6-8 months, markets will provide an opportunity to invest the fund in a manner which will be beneficial to the investors. So I think the model-based approach, along with our incremental investment approach, will be something which will make it a unique experience for the investors. And in the last 2 to 3 years, if we see, we have come up with many NFOs, and they are allowing investors entry into different categories of investments, be it the MNC fund, be it the Bharat Consumption Fund. And it is our endeavor that Flexi-cap fund, which is one of the widest mandates, it is a true to label wide mandate fund where investors can get across the board, and even the fund manager is not restricted by any constraints, right? So it is something which an investor should have in their portfolio for the long-term allocation towards equity.
Chintan, taking a cue from that, considering that equity market valuations at this juncture are fairly well priced, how do you really intend to deploy or invest in the markets initially?
True. So we have a framework called VCTS, which is valuation, cycle, trigger, and sentiment, which we follow. And no doubt, valuations on past parameters, if we see, or relative to past, they look rich. But if you look at the business cycle in India, we are just coming out of a trough in terms of earnings of corporates. We are coming out of a trough in terms of credit growth. We are coming out of a trough in terms of the capex cycle. And so we are at the cusp of probably growth, which is going to come at the same time. Valuation on past parameters is looking expensive. So if we combine these two, we will look not so expensive if the earnings actually turn up and the cycle actually turns for the better in terms of earnings. Trigger and sentiment wise, of course, the key trigger is oil price as well as what the US Fed is doing. And I think over the next 6-8 months, we'll keep hearing noise of US increasing interest rates, etc. But from an Indian cycle perspective, we are positive on India. So I think for those who are looking at India investments, that's where this VCTS framework is telling us that those who are investing in the Flexi-cap mandate, even if valuations look high today, if we are able to curate a portfolio over the next few months, it will be in the interest of investors who are looking to increase their equity allocation and finding it difficult, in fact, today, how to allocate. And that's where we are bringing this fund at this juncture.
Right. Very lastly, Chintan, what can investors, new as well as experienced, expect from adding the ICICI Prudential Flexicap Fund to their portfolio?
So clearly, I think our endeavor has always been to be a one-stop shop for all investors to have access to whatever their investments needs are. And the Flexi-cap mandate, like I mentioned, it's a very, very wide mandate. We can invest in large, mid, and small, and across sectors and stocks. So the expectation of any investor who's coming to this fund should be that we will allocate between large, mid, and small in a rational, model-based manner. And also the underlying sectors and stocks will be picked up in a manner where you get the right balance of growth while keeping the valuations in mind. And from an investor perspective, this would be a good fit for long-term allocation towards equity because of the wide nature in which this fund can invest.
Right. Thank you very much, Chintan, for joining us on this exclusive webinar on ICICI Prudential Flexicap Fund, NFO. Thank you for all the insights for all our audience.
Thank you. Stay safe. Take care.
Thank you. You too.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.